Hello guys, and Casper here again with a video a little bit different, but this is various ratios that I look at on like a weekly basis or so. We're going to go through them. We have some uranium measured against some stuff. We have some gold. We have yeah, basically gold and silver and some energy, right? And these are also the sectors that we follow the most here, on this one here. We will see which one is best. When can there be a switch? What level to look for? Again, rotation is very underused in my opinion. Rotating when the other one comes into play compared to the other. So you might be bullish on both of them, but um, with that view, excuse me, to basically decide, right? So we're gonna go through them. I don't have a lot of lines going on. I have the ones that I found important, trying to keeping it somewhat simple. Let's have a look see here. So URNM divided by XLE. To me, again here, huge rally, as you know, in 2021 and 2020, we peaked with that little spot, blow off top there, rounding bottom handle. So for me, my long-term bullishness, I mean, long-term, we're talking 2, 3 years. You can zoom out here. Once we start to get into here, I would expect, the ratio to be somewhere around here, right? That is what I'm expecting to see. Will it happen? We have to wait and see, obviously. But to me, we have a cup and handle here with a bit of maybe a bit too much of an angle, right? Maybe, but it's still a cup and handle. The handle is kind of perfect. I do believe that we could see a touch there on the lower side, and then we are to rally. So again, I think when energy becomes strong, and I do believe oil will become really really bullish again. It had a little fakey here, but we shall see. Um, and then uh, uranium will outperform the energy. Both will do well. But you can see here also we have picture, basically textbook flag. We have basically been resetting the breakout point here. Again, huge rally. It started it right there. Excuse me, guys. I wanna my am I all over the place here. So basically it started right there, right? Boom, that's the candle. And we have been resetting it completely. So um again, we might have a little bit more performance in favor of XLE to the downside here, but overall, long term, 3, 4 years, I do believe that URNM is a better play. It's the only thing that I can invalidate is obviously a break from that lower trend line there. So good. That was a long one, by the way. The next one here won't be that long. Um, there it is. So here we have URNM divided by the overall commodities, double top. Pretty cool. Well, not cool, but it's definitely there. We had that pinch there in 2023, the summer rally there. Same thing again. You have the waves complete. You're now testing that trend line there. Could very well be the bottom. Also horizontally, there is support right here. You can see it there. There is support. Pivot low. Tag here from the lower side. Tag again. So we are at support and what could be at the end of the trend here. Obviously, we need a few more weeks to see the bounce, or the next week at least. But yeah, as long as we hold here, I mean, if we don't hold here, let's say we rally and then we start to fade and then we go down. Obviously, we have mega support at the double bottom here at this ratio at 0.09. So yeah. So yeah. URNM divided by SILJ. That's a thick green line, by the way. So we have the uptrend not fully confirmed. And here I want to show you something that is, again, in order to have an uptrend or like a parallel, you need, in my view, anyways, 4 points to confirm it. So the ideal one is you have something like that, right? That's the ideal. Again, not picture perfect drawn, but you have one, two, three, four. Perfect. Especially if the symmetry in between are also somewhat ideal, right? That is perfect. That's like a 100% confirmation uptrend. Then you can have a variation. If you have three here, let's say, and you have one here on the lower side. Again, if they are dead on and you have a major pivot here, again, you have the lower there as a phantom support. It's not confirmed, but most likely you have some sort of support here. Again here, and right now we only have two, right? We have like that, the upper, parallel the lower. So we can't really confirm. In my opinion, we need, let's say it's going to come down here and we bounce. Cool, then we have the option confirmed. So again, that is my view on the parallels and the phantoms, how to use them. So not confirmed, more like a speculative little one here. Anyways, uranium divided by SILJ, massive peak there in favor of uranium. Flagging here again, it is more bullish in favor of uranium, and yes, we have been coming down from like 7 to like 3. So let's call it has basically been cut in half. Big support here, by the way. We're coming into a potential double bottom with green support. That's also where I think we're going to, like roughly 3, maybe a tad higher, is most likely where we bottom and start to see some buying coming in. We could get an undercut to have that third impulse complete, but to me here long term, the uptrend is somewhat clear, even though it's not fully confirmed. But the uptrend nonetheless, right, is still in favor of uranium for now. URNM divided by the SPY. Double top-ish here. Again, little fakey here. That little squeeze was really, really strong. Exciting, right? In late January. We pounced through and we failed. And then we have bear flag upon bear flag. And now we're here. Major pivot low. That's the spot, by the way. That's when spot entered the market with the U.UN. They bought it up. Again, that is a major pivot. We have the 3 waves. So again, I'm expecting some strength here in favor of uranium divided by this compared to the SP 500. How strong will it be? It all depends, right? We need to break that blue one there to resume the uptrend. So yeah, I think it's coming to an end. The bottom should be somewhere around here, guys. Should be. A one-liner, you could make it a 2, by the way. Again, the ceiling up here like that. So this is against the NASDAQ. Again, the spot low here, we are there again, seeing some buying coming in. We have the same kind of channel over there. Again, I'm expecting some sort of bounce right there. Right, we got the same here. We got a bounce, and this is a major one, and it seems like everything is complete. So hopefully that is the case, and we ought to see uranium do well. It's doing okay today, by the way. Not massively. This one here is, again, a ratio that I've been following for some time. Not looking at it that much because, I mean, but again, this is uranium miners URNM divided by Bitcoin. We have a channel there. We have it there. Cool. We have 3, and now we are seeing a little bit of an undercut, but we are getting some buying pressure now compared to, again, maybe if you use that one there, it makes more sense, right? You have a little bit of a fakey here. Again, sometimes they don't align perfectly, especially in ratios. It doesn't have to align perfectly. We will keep it like this, right? So we have the blue downtrend, or the wedge, the blue wedge, right? Boom, 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 boom. There we are. That is pretty much textbook. Very clean on the lower side, very clean on the upper side. Not perfect by any means. And we did have here, again, you can see this change here, 3 days candles. Basically, more or less takes out 3 months worth of trading. That is, if you were to do the rate of change indicator here, it would be boom, blasting heavily. So that is good. That to me says that, hey, we could be in for a little bounce here in favor of uranium. And the thing we want the most is a break of Bitcoin here in favor of uranium miners, because Bitcoin is, heavy leverage tech investment. Therefore, if we are to see this, that's a good indicator that uranium URNM is to outperform the Bitcoin, the tech, right? That's what we want. We want the rotation from tech into commodities. And normally, if you do go into commodities, you also go into energy, because energy is obviously like a commodity, right? So that's what we are hoping for. Interesting, very interesting. I do believe we're going to go to the blue. one way or the other, then we shall see. Hopefully we break, right? Hopefully that would be absolutely fantastic to see the break. URA divided by, this is basically URA divided by a ratio of me trying to be clever. It's just a way of, at least my way of showing how profitable, in this case, uranium are in relation to the spot price. So basically what they're digging up from the ground, adjusted for the oil price. So how much money are, you know, the miners making when you adjust for their energy input. And this is pretty darn good, right? We had the break there in September 2023, flagging. And yeah, this is a bullish setup. So when and if this resolves to the upside, I mean, the measured move from this, that's like that's roughly like 10, 15 years worth of head and shoulders pattern, is roughly 100. 90.4, 94, excuse me. So will we get there? I mean, for now, it looks like it. Obviously not next week, right? We need this will happen. If you were to do the speed of things here, we could see that getting hit, late 2026, maybe, right? So again, if that's the case, we are in for a period, if this resolves to the upside, if um, that uranium miners are going to be very, very profitable when you adjust those two things. So again, this is a weird chart in my opinion. This is the GDX divided by gold. Again, we can even remove that. So you basically have the downtrend. We have been trying to break it once there. We have a lot of things on top there. Again, depending on how you adjust the lines. Lower side, you have one there, little undercut here. So I think the downtrend is somewhat valid, even though it's not picture perfect by any means. We want it to rally, basically. That we want the downtrend to break. Ideally, right now we rally and then we break that high there. Confirmed. Gold miners is to outperform gold. That is when a lot of fun thing is happening. But for now, we're still coming down. Gold miners are not outperforming gold. So in order to have a really, like gold miners, silver miners, bull market, in my opinion, maybe you need to have like three things, but at least two. You want the gold to silver ratio to drop heavily. Meanwhile, you want to outperform, the miners to outperform the metal also. That is when, if that recipe is complete, that is good stuff happening. Juniors, again, also a little bit of a weird one here because we have the highs, we're coming down, we're breaking, not really, breaking, not really. So a ton of noise here. So yes, we are trying to break the downtrend, but in my opinion, it doesn't matter, of course, not gonna lie. But again, we need this blue bad bar here as we speak to break to the upside. So the level to look for, in my opinion, is 0.02 in the ratio. Until then, miners can do well. If gold goes up, miners most likely are to follow with the same factor, maybe like 1-to-1 here, like 1-to-1 because we're range bound. And a break of that, all of a sudden we could see 2-to-1, right? Where if gold goes up 100, 10%, miners ought to do 20%. But it all depends on that blue bad boy right there. I want to have an alert on. Of course I do. Don't mind me. Good. AG here divided by silver. Very interesting moment in this ratio. And also please note, by the way, how big of an underperformance this is quite, yeah, it's worth thinking about. Look at the underperformance by what's that? By the first Majestic compared to silver. Truly, down 80%, basically back to the lows of 2016, the lows there. And I know right here, silver was $30. That's the silver squeeze, by the way. And now we are at like 30, I think 32, 33 silver. So that's 30 silver, roughly 33, if my math serves me well on my memory. And we're down 80% versus that. So that is very, very big underperformance. But what we want to see here, again, we don't have any, clean bottoming pattern. We don't have any head and shoulders. We don't have any, like that major ones, but we do have what could be like a double bottom internal trend line here, I think will break because it is so pinpoint perfect. And volume is also coming into some degree. That, ladies and gentlemen, is First Majestic breaking out versus the 4-year downtrend after the silver squeeze. So in that case, if you start to see the big guys, in this case, First Majestic is, I think, the biggest silver producers that there is. I think they, yeah, again, you can quote me on that if I'm wrong or not. I don't exactly know, but they are by far one of the bigger guys in the silver space. Therefore, that is a complete change in behavior once we start to rally here, and then slowly start to grind our way up, meaning silver miners are to do well. Gold miners, I will say, will probably do the same, but especially since this is so silver related, that is a huge one. But again, we're not there yet. It's just an observation. We know exactly what to look for when, if that happens. We know, hey, good guys, we're ready to go, right? When we get that break, we are ready to go, and expecting miners to just do really, really well. Good. We have a lot more to cover. SIL divided by the silver price here. Again, beautiful, by the way. Oh, I mean, the trend is clear. If we break the blue downtrend here, and then I also have that little supply and demand here, fakey there. If we can start to rally above that green again, I'm to say that we have a good chance of this being a major low, and we can start to aim for the triangle high up here. Yes, some underbelly cut there, that also resistance, but to me, that is a huge moment where we have the downtrend sideways, and then we ought to go up, right? Potentially, when and if, in my opinion, we go to see the tag here, if we do, by the way, it's pretty far out in the future. If we are to reach that, we are talking, again, 4 or 5 years. That is a good exit, by the way, where when silver miners has outperformed silver by 2, or is it 2? Yeah, it's roughly 2, maybe 2.5, right? Just to, because we are most likely to see a move down there. So, but messy chart overall, silver divided by the SPY. Same thing here. We have that downtrend that were broken, not really broken, then broken, not really, right? Just playing with it. I have one trend line where I know, hey, good guys, I have the alert on, by the way. Good. That's that one there. So we have been breaking out a few times, trying to break out, but not really, right? Every time we hit that, you can see it's getting stopped. So the breakout to me happens once we start to trade above 0.06, roughly. That's when the silver futures, at least, is going to have at least a rally to the blue here. So we are talking, 30% outperformance in relation to the SPY. And the big move comes when and if that happens. You have 3 there, roughly. Again, you have roughly 3 there, and the 4th to break. So, but again, still very messy. Basically, 10 years worth of messy price action in this ratio. But still, to some degree, right? We do have symmetry. So SPX divided by the HUI. Yes, it's a long video. So again, pause, get your coffee. We still have roughly 10 minutes here. Still favors the SPX, but it doesn't take much to really put a nail in the coffin and have the HUI, which is the gold bug index, outperform the SP 500. 2011 low, 2020, 3 times. We're breaking here, back test, deep back test, and now we're back below again. So again, this is one of those breakouts that is not clean, like we saw in some of the previous ratios. So at this moment in time, I will say if we make a lower low below that, that is when we are to go all the way down to here. So from current prices, we are almost going to outperform 40% and roughly 60% from the confirmation. The bullish view is still that this could also be a bull flag, right? So decision time, and it's not very clear, but in my opinion, as long as we are below the white here and the golden, it is more likely to be a breakdown at some point. Gold miners divided by, again, gold and adjusted for energy. I hate that wick, where oil went to 0, by the way. We have the uptrend here. Yeah, that's a good uptrend. This was the peak in 2011. We had 2 peaks in gold, 2009, 11, and then basically we haven't been doing anything well. Yes, we had that good run there in 2020 for the miners, fading off all the way to the lower, and now we're getting close to that point again here. So again, gold miners has been making more and more money here, coming on the way up here. A little bit double top-ish at this moment in time. But we are in an uptrend where the gold miners are actually making more money from the gold that they pull out of the ground when you adjust their energy cost, which in this case is oil. So XLE divided by the SPY, one of my favorites, I will have to say, ratios. Major bottom there. This is a 2-year head and shoulders. We hit the target, and ever since then, the SPY has been the better play, really. But we also squeezing up heavily here. And again, if you know, these patterns here favors a move to the upside, right? It favors that, again, maybe like 75% of the time, again, just to put a number, right? That is the favor to break to the upside. We have the bottom, we have the rally, we have the little flag. I mean, if that break, energy all of a sudden becomes better than the SPY when it comes to investment. And big guys, they will see that and say, maybe for the next, basically for 2025, maybe we should be more exposed to energy compared to the SPY. So money will start to rotate into energy for 2025. But again, we needed to break. That is the main thing. And also, often you want to have like a higher high, really. So you might break, and then, yes, it's good, and then no. Again, breaking out, getting the higher high, and then, XLK, that is tech, by the way, divided by the energy. Same thing here, in my opinion. XLK here has been not overperforming, but outperforming energy for basically since the bottom there in the NASDAQ. We have been squeezing up here, and again, 95% here roughly, right? We are gonna drop down, and it could happen any day, really. If that happens, again, energy is a better play than the NASDAQ, the tech. That's good. That is very good. Again, we're talking uranium, obviously. Obviously, we're talking oil, gas, maybe even hydrogen will have its pump and dump. Who knows, right? Who knows? So we have here CCO. That's Cameco, the big one, the big player in the uranium space by far, actually. Divided by AG, the big player in silver. Which one is the better play? Looking at things right now, it is definitely Cameco. Yes, we have been double topping here, but also we are in a massive uptrend. We are correcting sideways. Until, we start to break down from these levels here at like 8, 9 in the ratio. Long-term Cameco is the better player to bet on, really. So yeah. Also note, by the way, the big break here. We broke on the 4th, right? Cameco outperforming, heavy rally, flagging here to some degree. So until proven otherwise, Cameco, even though Cameco has been hit quite hard here, is long-term the better one. If you want to say, again, do we want to go into Cameco or First Majestic? Basically, what you do in here, it doesn't really matter, if you are a long-term guy. If you want to time it, you can time the boundaries, obviously, but Dow Jones, important ratio. Again, one of the big ones, guys, is the Dow Jones is breaking down versus gold. That is basically, the big one. If there were like 3 big ratios to look for in gold, this is, one of those 3. And you can see the weekly momentum here is just rolling over, pushing down price. The only little bullish scenario is that this, again, for now, still could be a bull flag, right? So if we break the upside, that changes everything, by the way, everything. And you would want to be long the Dow Jones big time compared to gold. That is a huge breakout, a 25-year breakout, if that happens. So again, if that's the case, we are going to completely change strategy, I think. I don't believe it will happen. I think gold is in its golden little pocket with the environment, all that good stuff, where we are in time with debt, inflation, stagflation. I think gold will be the better play. And to confirm that, we need to fail the bull flag here, and then all of a sudden, oh boy, it opens up a big empty void here below. And that is exactly what we are striving for to see. SIL here divided by the URA. You can see here, big breakdown here in the ratio. That's when URA, right here, boom. URA is a better investment in late 2021. And again here, it doesn't mean that the URA has gone up this much. Again, it has just outperformed the SIL. And we do have a little bit of a, you could call it some sort of bottoming pattern here, actually trying to break out. And we can zoom in here just a tiny bit. Is it breaking out? I think, again, depending on how you draw those lines, again, it can be done a bit differently here, but I will say, yeah, we are probably looking at a breakout where, again, the silver miners are going to outperform the URA right here. Again, yeah, it looks like a breakout. It really does. So silver miners could be a better play here. And then looking back to the Cameco divided by AG, again, bigger confirmations is if we also drop down from that level and start to, again, roll over in favor of AG. Good. Again, silver miners, you want to be overweight in those compared to the uranium guys. So yeah, long video, guys, long video. Again, mix of ratios. Again, take it as you may. I'm just, again, that's how I look at these. Again, roughly once per week, sometimes daily if there is a very important ratio that is doing something cool. But I urge you to do the same. So if you have like 3 sectors that you like or 3 stocks, you can do a ratio to compare them. So for instance, again, you can also do, I want to, again, this is a little bit of, if you want to see aftermath or AG, which one is, the better one? Whoa, Jesus, is the better one at this moment in time? What do we want to see? You can, if we zoom out here, going up, that is aftermath. Going down is the First Majestic. So you can see here for the past 2 or 3 years, aftermath has been better. We are coming into some resistance here. It's not picture perfect, but we do have the low there, which, yeah, exactly with the high over here. So again, here we are, I think, coming to a place where we could see some short term in favor of what's it called? Of First Majestic. But again, the overall uptrend, right? The overall uptrend here is in favor of, yeah, like that. Oh, gorgeous, by the way, is in favor um of aftermath silver. So again, right. So short term, we could see First Majestic, but looking more years out, I think we're definitely AG might be a better play. It might be a better play. So again, that's how you can use it. You can also use it in sectors and all that good stuff. So again, guys, comments. If you have any questions, anything, I would happily answer. Have a great day, guys. Very long video. I need something to drink now. So cheers, guys. Bye.